Welcome to Bunnex Investment Group. Today we are going to talk about a very simple but very powerful trading strategy. This is for those who do not have much time to look at the charts. And from backtesting, we hit a very high win rate of up to 85%. And mind you, this is over a series of trades. But before we go through, make sure you subscribe to this channel and check the notification bell icon if you haven't done so that you won't miss any of our videos as we upload. So we are going to explain this in three parts. We are first going to define the H4 multi-day MOW pattern, then drift from peak concept, and then lastly examples. So make sure you stick up to the end so that you won't miss any of the information that we would have put across. So firstly, the H4 multi-day MOW, what is it? So it is actually an MOW that has its legs in 2 different days. By that we mean the first leg is in its day and then the second leg is in a separate day to the first leg. So it's a manipulative pattern that allows market makers to confuse traders and induce them in the opposite direction. If this kind of setup occurs on an H4 time frame, it's something that is there to confuse traders of where the market intends to go next. By that, if you see, the first leg will actually induce longs, then shorts, then those shorts taken out and more longs induced, and lastly those longs will be taken out and the market will drift away with power. So for this particular strategy, we need to first see this pattern on the H4 time frame and then incorporate the next principle that we are going to talk about. Then drift from the peak. That's the next thing that we need to see. As mentioned earlier, the first thing is to see a multi-day MOW on the H4 time frame. And whenever we see this setup on the H4 time frame, we would know that a peak has been issued. So whenever we see a multi-day peak, a multi-day MOW, we would know that a peak has been issued. The second thing to observe will be a market flow away from that issued peak. Let's say we have seen a multi-day M. In this case, that's the first step. The second step is now to see a drift away from this peak, and then 2 EMAs are employed to confirm if this peak has been logged and ready to keep flowing in one set direction. So to confirm if we are now going away from this peak and have a long unilateral movement, we need to use these 2 EMAs, which are the 13 EMA and the 50 EMA applied to close. So whenever we see these two crossing over, we would know that this particular peak has logged and we are now ready to move in a unilateral direction of the set point. Then our golden entry will be at the 50 EMA retest, and to simplify that further, let's see the next entry steps. So here are the entry steps. The first thing is to look for an H4 multi-day M, as I've said and illustrated. Then the next thing is to see an H4 1350 EMA crossover. After that, we now need to see a 50 EMA retest. So to fully comprehend this, let's see the following examples so that we can as well apply in our own charts. So this is USD against Canadian dollar, and I'm going to go through the same very steps that I have mentioned in the slides. So the first thing, as I've said, is to look for an M or a W, a multi-day M or a multi-day W. In this case, we can see the first leg price went up and came back to the same point, and after that a peak log or a 13. In my case, my 13 is the one in red and my 50 is the one in blue. Then a floor and a retest of the 50 EMA will give us an entry point. So it's now up to us to tune our reward to risk ratio. It's something that gives us a very, very tight stop loss, since it's entry on retest of the 50 EMA and the market went this way. In this case, we had first leg and second leg, which are which is a multi-day M, and after that was set, we can see a crossover of the 50 13 EMA and a flow. We could enter at this point or at this point, whatever point was valid, but this was the first one to come, so we could have entered at this point and the market went our way. Then we can see a multi-day W in this case, first leg, second leg, and a crossover. We can see a retest of the 50 EMA and the market went our way. We can as well see another point, a multi-day M. After that, we can see a crossover, a retest of the 50 EMA, which was a spike move to this point, giving us a beautiful entry point, and the market went our way. So like any other strategy, you will not be 100%. In this case, we had a multi-day W, first leg and second leg. After that, a crossover of the 50-13, and at this point, it was some sort of a retest, right? First, and then we can see the market coming back to take us out before moving in our direction. It will always be there. Losses are inevitable. Then in this case, we had a multi-day M, first leg, second leg, crossover of the 50-13 EMA, and then retest of the 50, and the market went our way. So that is basically what you'll be doing. It's a very simple strategy, but very powerful. You can backtest, and after backtesting and seeing the accuracy rates on your preferred trading instruments, that is when you can actually deem it a proper strategy for yourself, and you can apply it and make money out of it. On that note, we come to the end of this video. Check out our free Telegram channel. The link is right in the description box below.